Module 4, Internal Control Frameworks. 1. Course Overview. Module 4 explores internal control frameworks, the structural and procedural backbone that ensures financial integrity, operational efficiency, and regulatory compliance. Understanding frameworks is critical because internal controls are not just isolated policies, they are systematic, interrelated mechanisms designed to manage risk, safeguard assets, and enhance decision-making. This module provides you with a comprehensive understanding of internationally recognized control frameworks, their components, applications, and practical implementation, preparing them to design, evaluate, and strengthen control systems within their organizations. 2. Definition and purpose of internal control frameworks. Internal control frameworks are structured guidelines or models that organizations use to design and implement effective control systems, ensure the reliability of financial reporting, enhance operational efficiency and effectiveness, ensure compliance with laws, regulations, and internal policies, support strategic decision-making and risk management. A robust control framework is essential for aligning internal audits with organizational goals, providing a systematic approach to risk management, accountability, and continuous improvement. 3. Key internal control frameworks. The two most widely recognized frameworks are A. COSO Framework, Committee of Sponsoring Organizations, widely adopted globally for enterprise risk management and internal control. 5 components of COSO, Control Environment, establishes the organization's ethical tone, culture, and governance structure. Risk Assessment, identifies, analyzes, and prioritizes risks. Control Activities, policies and procedures that mitigate risks. Approvals, reconciliation, segregation of duties. Information and Communication, ensures timely, accurate, and relevant information flows throughout the organization. Monitoring, ongoing evaluation of internal controls to ensure effectiveness and adaptability. B. ISO 31000 Framework, focuses on risk management principles and guidelines, emphasizes risk identification, assessment, mitigation, and continuous monitoring, encourages integration of risk management with strategic objectives. Other frameworks include COBIT for IT controls and Sarbanes-Oxley (SOX) compliance frameworks, particularly relevant for publicly listed organizations. 4. Components of effective internal controls. Effective internal control systems are built on interrelated components. A. Control environment, organizational culture, ethics, leadership, and governance. Example, code of conduct, management philosophy, and integrity standards. Risk assessment, systematic identification and analysis of internal and external risks. Prioritization ensures resources are focused on high-risk areas. Control activities, policies, procedures, and practices that mitigate risks. Examples, approval hierarchies, reconciliations, audits, IT access controls. D. Information and communication mechanisms to ensure accurate, timely, and relevant information reaches decision-makers, includes reporting channels, financial statements, dashboards, and internal memos. 5. Designing and implementing control frameworks. To implement an internal control framework effectively, define objectives, align controls with strategic, operational, and financial goals, assess risks, identify threats that could prevent achieving objectives, design controls, develop policies, procedures, and IT systems to mitigate identified risks, communicate and train, educate employees on their roles and responsibilities, monitor and review, continuously assess and update controls to ensure effectiveness. A well-designed framework ensures that internal audits, financial reporting, compliance, and operational processes are integrated, supporting organizational governance and resilience. 6. Limitations of internal control frameworks. While frameworks provide structure, Limitations include human error. Mistakes can still occur despite controls. Collusion. Controls may be bypassed if employees collaborate to commit fraud. Cost versus benefit. Excessive controls can be costly and reduce operational efficiency. Rapid changes. Economic, technological, or regulatory changes may render controls ineffective. Recognizing limitations allows organizations to supplement frameworks with audits, monitoring, and continuous improvement initiatives. 7. Monitoring and testing controls. Ongoing monitoring, regular checks, and continuous evaluation by management. Periodic testing. Internal auditors verify the design and effectiveness of controls. Audit trails. Documentation of transactions and approvals for verification. Feedback loops. Adjusting controls based on audit findings, risk assessments, and operational feedback. Monitoring ensures that control frameworks remain dynamic, adaptive, and responsive to evolving organizational needs. 8. Benefits of internal control frameworks: strengthened financial integrity and accuracy, reduced operational risks and fraud exposure, enhanced regulatory compliance and governance, improved decision-making through reliable information, encouraged organizational discipline, accountability, and transparency, facilitated audit efficiency by providing structured evaluation mechanisms. 9. Emerging trends in control frameworks: integration with technology, ERP systems, data analytics, AI-assisted monitoring, risk-based controls, prioritizing controls based on identified high-risk areas, sustainability and ESG compliance, embedding environmental and social controls into frameworks. Continuous auditing, real-time monitoring using dashboards and automated alerts. These trends ensure that internal control frameworks are not static, but evolving tools that enhance operational resilience and strategic decision-making. 10. Summary. Module 4 provides you with advanced knowledge of internal control frameworks, emphasizing understanding global frameworks such as COSO and ISO 31000, designing, implementing, and monitoring effective controls, integrating control frameworks with internal audits, risk assessment, and financial operations, recognizing limitations and adapting frameworks to emerging trends. You will be able to evaluate, strengthen, and implement robust control systems that support organizational governance, financial integrity, and operational efficiency.